All right. So in classifying those bonds, right? There is a kind of a bond called shelf registration, right? The issuing style, right? Well, it allows the issuers to pre-register a security issue and then offer the securities when the financing is actually needed. So shelf. So you have a shelf over there, bookshelf kind of things. You can think of it that way, right? Right now you seem to be issuing the bond, right? Okay, but actual borrowing does not happen at that moment. You're just registering it, okay, to the regulator, so that in the future, anytime you need money, you can borrow accordingly. And then SEC Rule 144A says that it allows a qualified institutional investors to trade private placements. These issues do not have to meet the restrict information. They have to meet the strict information disclosure requirements of publicly traded issues. Okay, shelf registration, and then all these kind of things, right? Anyway, then a global bond is one category of bond. This is a very large international bond offering by a single borrower that is simultaneously sold in North America, Europe, and Asia, all different places you can issue simultaneously as a borrower. Let's say global bond issues were first offered in 1989. Global bonds denominated in US dollars and issued by US corporations trade as Eurobonds overseas and domestic bonds in the United States. Now, Deutsche Telekom's global bond is an interesting case. Relevant to this, the largest corporate global bond issue, right, date is the Deutsche Telekom's $14.6 billion bond issuance. It was a multi-currency offering, and the issue includes 3 US dollar tranches with 5 or 10 and 30-year maturities totaling $9.5 billion, 2 euro tranches with 5 and 10-year maturities totaling 3 billion euros, different currencies, different amounts, different maturities, and 2 British pound sterling tranches with a 5 and 30-year maturities totaling 950 million pounds. Again, different currencies, different amounts, and then different maturities. A 1-year Japanese yen tranche of 90 billion Japanese yen. Okay, so 4 different currencies and different maturities and all these kind of structures going on within one issuance, right? For this purpose, your underwriter of the bond has to have some global exposure, right? Big investment bank, right? And then types of instruments, well, there's a straight fixed rate debt, floating rate notes, equity related notes, and zero coupon bonds and dual currency bonds, composite currency bonds. You can think about it this way. Now, in this table, you see a typical characteristics of international bond market instruments, right? Straight fixed rate bond is there, and then it's typically frequency of interest payment is annual, and the size of coupon payment is fixed. That's why it is called a fixed rate straight bond. This is the bond typical that you've learned in your investment class or financial management, right? And the fixed income class maybe. And then payoff at maturity, well, currency of issue will be there, right? The floating rate note is different in that its coupon payment varies. Coupon rate is LIBOR rate plus some credit spread. Okay, LIBOR plus kind of structure. If it is, LIBOR based, sometimes SIBOR based or whatever, rate fluctuating, right? And then quarterly semi-annual coupon payment happens over there. And then payoff at maturity is currency of issue. Convertible bond is annual coupon bond. And then the size of the coupon payment is fixed. But interesting thing is the currency, the payoff at maturity is currency of issue or conversion to equity shares. So if the, whichever is more favorable for the bondholders, right? If the share price goes up, okay, so much, more than what is promised over here, convertible, right? It has an option so that you can convert this bond into equity so that you can become an equity holder at the end of the maturity. If it is not favorable, you still hold as a bond, stay as a bondholder, and then get repaid as much as the face value. Anyway, the next one is straight fixed rate with equity warrants, which has annual interest payment, coupon payment, and the coupon size is fixed. And then the payoff at maturity is the currency of issue plus equity shares from exercised warrants. And then you have a kind of a call option over there. And then 신주 인수권부 사채, 인수권, 권리. It's like a right that you have to buy certain equity if you pay extra money, okay, as much as the strike price, but you have the call option. Whereas over here, you have that you can convert the whole bond into equity. That's the difference. Whole bond into equity versus you just have a call option on equity. All right, and then dual currency bond, right? Dual currency bond is annual coupon bond, and then the coupon is fixed, and then the currency is dual, like multiple currency. You can repay it, right? So those are different kinds summarized in this table. So next is the straight fixed rate debt. These are the plain vanilla bonds with a specified coupon rate and maturity and no options attached. Since most Eurobonds are bearer bonds, coupon dates end to be annual rather than semi-annual. And the vast majority of new international bond offerings are straight fixed rate issues. Floating rate notes, FRN, is just like an adjustable rate mortgage, and then common reference rates are 3 months or 6 months US dollar LIBOR. Since floating rate notes reset every 6 or 12 months, the premium or discount is usually quite small, and then it's like a LIBOR plus 120 basis points or 100, LIBOR plus 2% or something like that. So reference rate LIBOR works there. And then Samsung Electronics issued an FRN at LIBOR plus 125. 0.125% semi-annual coupon, and coupon rate is fixed at the beginning of every 6 months. Current LIBOR rate is 5.7%. What is the coupon rate amount? Coupon amount on a $1,000 face value? That would be $33.625 because you multiply 0.5 to 0.066 LIBOR rate plus your spread, credit spread of 0.00125%, 12.5 basis points, right? So, and then multiply the whole thing by your face value. That's $33.625. So this time the coupon rate is this, $33. And then Samsung Electronics issued an FRN at LIBOR plus 0.125% semi-annual coupon, and the same thing. If on the next reset date, 6-month LIBOR is 5.7%, and the following semi-annual coupon will be set at So that would be $29.125, which is the whole thing is the same except the LIBOR rate, the base rate, changed to 0.057. Right now, as market interest rate changes, the coupon amount follows. So interest rate risk is minimal for floating rate notes, right? When you talk about bond valuation, you may first worry about the bond's duration and convexity, all these kind of things. Well, and then the value of the bond changes and then goes below 100 or above 100 because the yield to maturity is different from the coupon rate. Okay, and coupon rate is fixed usually. But the thing is, over here, FRN, the coupon rate is almost always the same as the yield to maturity. So that's why the value of the bond has least chances to fluctuate. Okay. Equity-related bonds are also there. Right, two types of equity-related bonds: convertible bonds and then a bond with warrant. Now, a convertible bond issue allows the investors or exchange the bond for a predetermined number of equity shares of the issuer. The floor value of a convertible bond is its straight fixed rate bond value, and then convertibles usually sell at a premium above the larger of their straight debt value and their conversion value. Investors are usually willing to accept a lower coupon rate of interest than the comparable straight fixed coupon rate because they find the conversion feature attractive. And then bonds with equity warrant. These bonds allow the holder to keep the bond but still buy a specified number of shares in the firm of the issuer, at the specified price. They can be viewed as a straight fixed rate bond with the addition of a call option or warrant feature. The warrant entitles the bondholders to purchase a certain number of equity shares in the issuer at the pre-stated cash price over a predetermined period of time. And with a convertible bond, you surrender the bond to get the shares, and with equity warrant bonds, you pay cash and keep the bond. A zero coupon bond is coupon amount is zero, right? Nothing. Only principal, right? The face value is the only obligation for the issuers. Now, zero coupon bonds are sold at large discount from face value because there is no cash flow until maturity. In the US, investors in zero coupon bond owe taxes on the imputed income represented by the increase in present value each year, while in Japan, the gain is tax-free cap gain. And pricing is very straightforward. Your present value should be equal to par value divided by 1 plus r to the power of big T. Dual currency bond is also there, a straight fixed rate bond with interest paid in one currency and principal in another currency. Japanese firms have been big issuers of these dual currency bonds with coupons in yen and principal in dollars. So it's a good option for multinational corporations financing a foreign subsidiary. So you see the timeline that goes from 0, that's today, and 1 year, and then 2, 3, 5, and then n-1 to the n. That's the maturity date. So coupon payment will be on Japanese yen, and the principal payment at the end of the maturity will be dollar. That's what the structure is like. And composite currency bonds is denominated in a currency basket like the SDRs or ECUs. SDR is like what? IMF special drawing right? And of a single currency, instead of a single currency, you have a multiple currency basket over there. It can be there, often called currency cocktail bonds. So cocktail like rainbow, like all these different kinds of currency mixed together. And then typically straight fixed rate debt is structured. Okay, of course, the currency being composite currency is already complicated enough, right? Now, This exhibit shows the currency distribution of international bonds amount outstanding, right, in billions of dollars. And then up until 2018, absolute majority is US dollar. The next is euro, and then the pound sterling, Japanese yen, and Australian dollar, Swiss franc, and other currencies goes on. And then this is the international bond amounts outstanding, classified by nationality and the type of issuer. So you see a big portion, okay, is the UK, which is bigger than in the United States. And why UK is bigger, we talked about it in the last lecture about Warburg's contribution, right? And to make the Euro bond market a huge one, to revive London as the capital market after Second World War. That kind of effort has been there. And then UK, US, and then what is that? Netherlands and other countries follows, right? And then financial corporations and general government, and then international organizations, they all issue bonds, right? But the predominantly that's financial corporations are the biggest issuers, and then there are non-financial corporations issuing bonds, right? International bond market, credit rating, right? It's like Fitch IBCA, right? Fitch IBCA, Moody's, and Standard & Poor's sell credit. They sell credit rating analysis to their subscribers, right? What's the credit rating of each different issuers, right? And then they focus on default risk, not exchange rate risk or other risks, right? Credit risk. 신용평가기관 in Korean terminology, and then they are assessing sovereign debt, focusing on political risk and economic risk, right? Euro bond market structure, well, primary market and secondary market is there, right? Primary market, it's very similar to US underwriting process. And then secondary market, well, that's everything that happens after the issuance. Everything after primary market situation is secondary market, which is OTC market, over the counter, right? Centered in London, right? It is not an exchange-based market, but over the counter, right? So just investors call up each other, the banks, the investment banks that trade this one, they call up each other over the phone, right? And then buy and sell in that over-the-counter relations. And then it's comprised of market makers as well as brokers. And then market makers and brokers are members of the international capital. And then calling up is usually done by these kind of market makers, right? Market Association, ICMA, is there, which is a self-regulatory body based in Zurich. And we have a student from Zurich, Remy, hey, right? And then clearing procedures is like Euroclear, and then Citadel handle most Eurobond trades, yes. And then talking about credit rating, sovereign credit rating by S&P. Schematically, it looks like this, right? 5 key areas to determine a sovereign credit rate worthiness is there. I mean, for me, as a guy from South Korea, which suffered from this credit or bank financial crisis in 1997, the credit rating of the country, right? Country's bond was such a big issue. So that was always wondered, how do these rating agencies work? And then what's the rating criteria? How do they score it? All things like that. But after all, it's about cash flow and then the discount rate, right? How much of a cash flow can the country generate, which has a lot to do with their balance of payment, and then the fiscal policies and things like that. And then, so let's look at this. Institutional assessment, and then economic assessment goes on together with it, and then external assessment and fiscal assessment, monetary assessment happens. What are those assessments? Well, it goes back to their macroeconomic analysis, fiscal policy and monetary policy. They study each country's policies like that, and external environment, they also study it. And then there they evaluate how flexible is this country, and then what's the performance profile of this. And then institutional and economic assessment, they study this macroeconomic situation, and institutional and economic profile is built up with that to understand the policy makers' maturity, and then things like that, policy reliability. And then combining all these, they come up with sovereign indicative rating level, and then they do some supplemental adjustment factors and one notch up or down, and then if applicable, and then foreign currency sovereign rating is done, and then 0 or 2 notches uplift happens for local currency sovereign rating. So foreign currency rating is more conservative, whereas local currency rating is a bit more lenient to the local government. Why is that the case? Because local currency debt, the central government can always repay by printing money. So that's why. Foreign currency, US dollar bond debt, they cannot print dollars, right? Otherwise, you're North Korea, who is printing fake dollars or something like that. So, no, okay? And then assessing the 5 main sovereign rating factors, right? The analysis of each of the 5 key factors consists of quantitative and qualitative assessment. I mean, the whole assessment process, it's very inevitably it's going to be it's kind of a combination of art and science, I would say. Qualitative judgment always happen, okay? Don't believe everything is quantitative, number, okay? That's why those non-engineers can, work in the sovereign rating agency or something like that. Then the math is not everything. And then some factors such as the robustness of political institutions are primarily qualitative, while others such as those relating to the real economy, debt, and external liquidity use mostly quantitative indicators. By the way, talking about the economics, right? Many of you want to work for the 금융공기업 or public sector financial companies, right? Besides, and then many of you want to work for banks and investment banks, and you don't know what to do in your free time. Do I have to study for? Many of you ask, what kind of licenses do I have to work for? What kind of exams do I have to prepare for? And I say, no. Spend your time studying economics and mathematics, all right? Form groups with, different, from the students from economics department or global economics, and then go ahead and study with them so that you will familiarize yourself with the economic concepts. And that's going to help you in the long run. It's not visible right in front. So that's why you don't know how to do that, and you don't want to go there, because it's not visible. Like, there's no exam going on, right? But that's what you have to do, okay? Familiarizing yourself with economics and mathematics. Eurobond, the tombstone is one sample is over here. Once a bond is issued, corporate bond or sovereign bond, they make a tombstone as a record, okay? Plaque kind of things. So Hamburgische Landesbank is the one in this bond issuance. And then this bond issue, right? The issuer is Hamburgische Landesbank. It's land bank in Korea, or 주택은행 kind of things. They issued as much as $2 billion, and then it was Euro midterm note program. For this issuance of bond, Who was the underwriter? Well, you see here, the arrangers is Merrill Lynch International. So those global investment bank, Merrill Lynch, was the underwriter, lead underwriter, and then Merrill Lynch Capital Markets Limited, as well as Frankfurt Main branch was involved. And then dealers are Credit Suisse First Boston, and then Hamburgische Landesbank as well, and Merrill Lynch, and Morgan Stanley, Dean Witter, Salomon Smith Barney, all of them were joining with the forces together. Okay? And then you see bond issuance underwriter. They are not sole underwriters, but it's a syndicate of underwriters, right? And then Toyota Tsusho Corporation once issued their bond, 500 million US dollars worth, and then the due date or maturity is 2024, and coupon rate is 2.596%, and issue price was par 100%. And who were the underwriters, lead manager, and joint book runners? They were JP Morgan, Bank of America, Merrill Lynch, and Morgan Stanley. When was it? Well, September 11, 2019. Okay? So after issuing this bond, they celebrated like this by making a tombstone. And this kind of tombstone, okay, is a big celebration thing for the bankers involved, right? The underwriting banks. My boss used to have this kind of tombstone in his shelf, right? So I remember that part. And then Twitter once issued the corporate bond, 1.15 billion convertible senior notes was there. What do you mean by senior notes? Well, the seniority, right? Seniority of your debt is an important thing, right? Subordinate debt versus senior debt, and then after, in case of bankruptcy, who gets paid first? Okay, the senior note or senior bond is the one that gets repaid first, right? Senior note, convertible. This is equity stock convertible at some point. And then who was the underwriters? Goldman Sachs, Morgan Stanley, and JP Morgan, Bank of America, Merrill Lynch, Wells Fargo, and I don't see that, Allen Company or something like that. Sorry about that. But anyway, so those are the June 2018 was the time of issuance, right? Tombstone is made like this cute form like this. So that's that, right? Once you become your bankers, right? I hope you accumulate a lot of great tombstones and become successful. Good luck. A borrower, right? The primary market, right? A borrower desiring to raise funds by issuing Eurobonds to the investing public will contact an investment banker and ask it to serve as the lead manager of a underwriting syndicate that will bring the bonds to the market. The underwriting syndicate is a group of investment banks, merchant banks, and the merchant banking arms of commercial banks that specialize in some phase of a public issuance. At one point, Bank of America, my group, right? My boss, right? Was a lead manager of underwriting a syndicated bond for LG Philips, right? LG Philips. Nowadays, it's LG Display, right? So for that part, me and my boss had to visit together with the bankers from the other syndicated banks, right? International banks went to visited the production facility of LG Philips LCD. So we had to study how the LCD was being produced, what is it like, and then those semiconductors. Like you see the LCD screen. Of course, you have OLED screen in your computer, I guess, but some of your screen is LCD, right? That's liquid crystal display, and this is you see a panel of glass panel that you see on your screen is actually a two layers of glass attached, but they are not attached directly, but in between there is an empty space where you fill in with this liquid crystal, which is a silicon kind of things inside. And that works, that is like a semiconductor. As you throw in electricity, this kind of liquid crystal molecule, right, turns around, right, turn this way or that way, and then accordingly the angle matters, right? The angle, you twist it this way or that way, makes a difference in terms of reflecting the backlight so that it becomes a color. Sometimes it's white, sometimes it's green, sometimes it's red, like that. And then the degree and then the angle, how much does that get affected? Well, that's the area of partial differential equation where the mathematicians rule over there. But anyway, that's a basic understanding of TFT LCD. And then as a lead manager analyst, I had to write a report on this kind of things and what was the industry outlook and things like that, how promising that is, right? And then we, as a lead manager, you set up the price, which means the interest rate on this bond, right? Should it be floating rate note or fixed rate note? If it's going to be floating rate, LIBOR plus how many basis points? What is their credit rating and all these kind of things, right? Yeah. And then the primary market, the lead manager will sometimes invite co-managers to form a managing group to help negotiate terms with the borrower, ascertain market conditions, and manage the issuance. And then I remember at one point in Bank of America, we were asked by other lead managers for when Citigroup was issuing a corporate bond for Hynix. At that time, that was Hyundai Groups, right? Hyundai Electronics. Because the issuance amount was so huge that Citibank and their gangs, their groups, could not take care of it on their own. And then they asked Bank of America about joining them as a co-manager or something like that. We said no, of course, because Hynix was on the brink of bankruptcy, and then the CFO departed abruptly, and then we noticed that is not a good sign for the borrowers, right? Rats jumping ship. That's a sign of the bankruptcy coming up nearby, which happened actually. And then that was the moment, that I still remember very vividly. Anyway, Eurobond practices, yes, the managing group, along with other banks, will serve as underwriters for the issue. They will commit their own capital, sit on this amount of lending to buy the issue from the borrower, right? 깔고 앉아. And then, lend the money at a discount from the issue price. The discount or underwriting spread is typically in the 2 to 2.5% range. By comparison, the spread average is about 1% for domestic issues. Most of the underwriters, along with other banks, will be part of a selling group that sells the bonds to the investing public, right? So called private placement because it's not sold in the open exchange, but they sell it through their banking network or personal network, right? Rich individuals or other asset managers or bankers, right, involved, right? They sell it through their banking network. It's all about who knows who. Eurobonds initially purchased in the primary market for a member of the selling group may be resold prior to their maturities to other investors in the secondary market. And the secondary market for Eurobond is an over-the-counter market with principal trading in London. However, important trading is also done in other major European money centers such as Zurich, Luxembourg, Frankfurt, and Amsterdam. Right? The secondary market consists of market makers and brokers connected by an array of telecommunication equipment, and market makers stand ready to buy or sell for their own account by quoting two-way bid and ask prices. Always like bid ask, right? Somebody has to be keep on buying and keep on selling. They quote this rate, okay, to make the market and invite buyers and sellers. Market makers trade directly with one another through a broker or with retail customers. The bid-ask spread represents a market maker's only profit. No other commission is charged. And then the Eurobond transactions in the secondary market requires a system for transferring ownership and payment from one party to another. Two major clearing systems, Euroclear and Clearstream International, handle most Eurobond trades. Euroclear is based in Brussels and is operated by Euroclear Bank. Clearstream is located in Luxembourg, Benelux, Belgium, Netherlands, and Luxembourg. Those are very important cities in the countries in European trading. And then both clearing systems operate in a similar manner, and each clearing system has a group of depository banks that physically store bond certificates. And then members of either system hold cash and bond accounts. When a transaction is conducted, electronic book entries are made that transfer book ownership of the bond certificates from the seller to buyer and transfer funds from the purchaser's cash account to the sellers. Then physical transfer of the bond seldom takes place. And other functions of the clearing system, well, is like Euroclear and Clearstream perform other functions associated with the efficient operation of the Eurobond market. Number one, the clearing systems will finance up to 90% of the inventory that a Eurobond market maker has deposited within the system. And number two, the clearing system will assist in the distribution of a new bond issue. The clearing systems will take physical possession of the newly printed bond certificates in the depository, collect subscription payments from the purchasers, and record ownership of the bonds. Okay. Number three, the clearing systems will also distribute coupon payments. The borrower pays to the clearing system the coupon interest due on the portion of the issue held in the depository, which in turn credits the appropriate amount to the bond owner's cash account. And previously, did I say that holding a coupon, you go to the issuing bank and then they will give you the money? Well, these days it's a clearing system. Okay, don't go to the bank directly, but use this clearing system. And then international bond market indices. There are several international bond market indices. JP Morgan and company, they issue this kind of things. Domestic bond indices and the international government bond index for 18 countries. And it's widely referenced and often used as a benchmark. And it appears daily in Wall Street Journal. So go ahead and Google search it. The summary is self-explanatory. Just go ahead and read it. Okay. So I hope you enjoyed this lecture about international bond market. And I'm going to make another short video talking about this necessary securities by Rothschild family. And then you're going to see historically how these bonds have been issued, and then who are getting involved and what countries and things like that. So hope to see you there. And then thanks for watching until now. Thank you very much. Bye-bye.